All right, so as you guys know, bond yields have been on an absolute tear as of late, being as low as just 2.9% in May, but now currently sitting at 4.4%, meaning bond yields have basically skyrocketed a full 1.5% in the last couple months. The greed and fear index is sitting at a 19, which is extreme fear, and just last week we were at 23, so we've been terrified for a few weeks now in the stock market, and typically whatever's happening in the stock market just happens before it happens in real estate. So you can bet if stock market is scared, real estate is scared. So what's happening right now is for real estate market, kicking it off with detached homes. Well, the detached market's getting beat up right now because it is the most expensive product on the market, and interest rates are at 7%. So there's really no surprise there. So we topped out at 1.246 million in the micro term and have since come down in the last 2 months to 1.19 million for a $56,000 decline. Now, some people like to look at median sales price and some people look at average home prices when they're talking about where prices have gone. I personally like to use the HPI, the home price index. I feel like it's just a lot less, jumpy, so to speak. I can't really find a good word right now, it kind of escapes me, but I feel like it's just more smoothed out. It's a more accurate representation as to what is happening with prices, and especially in a market with really low sales volume. There's like 40 detached homes sold last month. The data can get very easily skewed if a couple homes that sell are like $2 million and then a house is like 700 grand sells. That middle number, the median number, could get skewed, or the average number especially gets skewed. So I like to use the HPI, and the HPI says we're down $56,000 in the last 2 months. Now, detached homes are currently sitting at a 10% sales ratio, and this is a buyer's market, guys. Anything below 12% buyer's market, 12 to 20 balanced, anything above 20 seller's market. And we are currently sitting at, get ready for this, 9.86 months of inventory in the detached market. And anything from 0 to 3 is a seller's market. 3 to 6 is a balanced market, and anything above 6 is a buyer's market. So we're in a strong buyer's market for Abbotsford detached homes. Now, townhomes, a bit of a different story, holding strong and actually went up $1,000 in September. Sales ratio sitting at 35%, which is a hot seller's market. And I can tell you guys in the last 2 days, I don't know when I'm going to be posting this video, but the last 2 days, time of recording, 0 townhomes have been listed. And we're currently sitting at 2.8 months of inventory for townhomes, which is a seller's market objectively. And if all things stayed the same, even though we're in a seller's market via months of inventory and sales ratio, I would still say prices are likely going to come down because fixed rates have gone up so much as of late, and every day more and more rate holds are expiring. So there's probably still people that have fixed rate holds at 5.5% and 5.6%, and all of those are expiring and are now at 6.5% if they want to get that rate hold today. And for that reason, I think even though all of these statistics point to seller's market, prices will likely come down in townhomes at some point this year. Maybe not a ton, but a smidge. Apartments went down $5,000 from $452,000 to $447,000, and it's about time because Abbey apartments have been scorching hot basically all year, right? So we bottomed out at $390,000 in January, and we're up like 13% off the bottom, all the way up to $452K at the micro peak there. So sales ratio of 39% still, and only 2.6 months of inventory for Abbotsford apartments. So my overall take on the market right now, I will tell you, in the Real Estate Board of Greater Vancouver, we saw 1,900 sales in September, and fall 2022, so fall winter 2022, this time last year, if we adjust for population, that was probably the worst market Canada has ever seen in terms of sales volume after you adjust for population. And this time last year, we saw 1,700 sales. So we're only slightly better than last year. And although we're slightly better, I personally think that we have the potential to end this year worse off than last year. And last year, we bottomed out at 1,031 sales in January. So I guess it would be this year, January 2023. But we bottomed out at 1,000 sales for the Real Estate Board of Greater Vancouver. Right now, we're at 1,900. And, prices are higher than they were this time last year, and interest rates are like 2% higher than they were this time last year. So I think going into the end of the year, you're going to see sales volumes just continue to fall and fall and fall, and likely prices are going to bleed with it, in my opinion. Now, who knows, right? I don't have a crystal ball, but this is all for fun and games and entertainment, right? So I think, sales volumes are going to fall and prices are likely going to keep going down at least until the end of the year, right? I don't know what's going to happen February 2024. Could be in a completely different market at that point, but I think till the end of the year, I'm pretty confident in saying we're going to see prices bleed and sales volumes go down. So if you guys enjoyed this video, do not forget to subscribe. And if you like this video, you should watch this one over here. I'm Thatagentkelly, and I'm making moves to move you. Peace.